check or you make that deposit to that municipality, you're either it is again a fork in the road. You're either getting the property or you're getting your money back with that guaranteed interest rate.
Yeah, I love that. And a lot of people, I'm surprised how many people don't realize this. Like the S&P 500 doesn't even average 10% a year. So
Well,
that's,
not only do they not even average 10%, but if you think about it this way, if you go, most people don't realize this. Remember when Warren Buffett says, rule number one, don't lose money. Rule number two, don't forget rule number one. The
yeah.
main reason why this is so important, because think about this for a second for your listeners. If you got $10,000 in an account and you lose 5,000 of it, for you able to just get back to even, you have to earn 100% of your money back. If you happen to only Most people only look and say, "Oh, I've lost $5,000, no big deal. I just got to get back 50%." If you get back 50%, you're at $7,500. You're still behind, and so that's the biggest deterrent of earning wealth. So like you said, the volatility in the market. Anytime you lose money, you have to earn more than what you lost just to get back to even. So when you have these guaranteed opportunities, things like again these tax liens that have guaranteed interest rates that cannot go backward, you're going to be so much further along than taking risk out in the marketplace just because there's no volatility of ever losing money.
Yeah, and another thing when it comes to just trading the market, like crypto's taxed as regular income. Futures is nice in short-term gains because you're taxed at 40% rather than the traditional 50 to 60. 60% is long-term capital gains if you're trading futures, so tax higher. But with stocks, forex, futures, when you're taxed, whenever you make money, you always take half of what you make. So half of that, that's the IRS money. That's their money. You don't touch that. That's theirs, right? But when you're taxed, so uh, let's say I make $50,000, okay, and I end up losing. Let's say I had $150,000 account. I made 50,000. Then say I lost 100,000. Okay, just some simple here. I still have to pay taxes on the $50,000 that I made. So there's a lot more risk involved in that than it sounds like taxing and investing for sure. But I also want to talk a little about the risks. Are there any risks or challenges associated with tax lien investing that people should be aware of?
I mean, yeah, there's risks in everything when you think about it. I mean, the biggest risk that I see um, in at least tax liens again it well, let me take a step back. It always just comes down to what your strategy is, okay? A lot of these huge hedge funds and these unions that come in and spend millions of dollars on these courthouse steps, their only game is to buy properties that are, because here's the thing. Think about it this way. When someone pays off their mortgage, most of the time those taxes and insurance are escrowed, right? You go and borrow money from Regions Bank. Regions escrows your taxes and insurance, and they just couple that into your monthly payment. And so the bank pays those taxes for you every single year. So then, because if you were to not pay the taxes, the tax lien actually jumps in front of the bank's lien. Okay, so the bank makes sure that hey, we're never going to be in that situation where the taxes get sold on our property because we have collateral to this. So they don't want to put themselves in a position. So that's why they escrow your taxes and insurance because they want to make sure that that stuff gets paid. They don't trust the borrower. But let's say that, the 30th year of that mortgage or the 20th year of that mortgage comes up and you finally pay off your house, right? Woohoo, you finally paid it off, whatever. You haven't paid your own taxes or insurance for the last 20 years, okay? So what happens more often than not is that the first year you haven't paid, you didn't pay your property taxes because you hadn't done it for 20 years. You probably have never done it before. So what these huge funds will do is they'll come in and they will buy the tax lien on those nicer homes or the properties that are paid off. Not because they actually want to own the home, they want to own the real estate, but because they know the borrower that's paid off their house is good for the money and they're going to be able to go and get that money back with the interest, right? Does that make sense from
Yeah.
30,000 feet? Okay. So those are the types of assets that those funds are purchasing or those massive, teachers unions and things like that. On the other spectrum, you have investors that are going directly after the property. They see that, hey, this property is dilapidated, it's completely vacant. They're looking for cash flow. At least in Alabama. Now, I'm not talking about other states. I've said that before. But in Alabama, if the property that is a tax lien is vacant, you can go in and record the tax lien. You can change the utilities and put, and change the locks. And then you can begin immediately renting that property out, even though you don't technically have a warranty deed. If you have a lien to it and there's nobody occupying it, you can go in and begin immediately cash flowing that property. That's something that I've done in the past. I don't even know how many times. It's not that difficult to do. But again, those investors are going after, the end game, which is like owning the property. So if you buy, so to distill down your question, if you're trying to buy a property or buy the taxes and the property is like dilapidated and fallen in, you might pay the back taxes of like $6,000 or $7,000, and the house might only be worth like $2,000, right? Because it's on the ground. So if you buy the back taxes of a vacant piece of land for $10,000, but you can only sell it for $5,000, well then you just lost money by buying the tax lien. So you have to put that more on the investor to do their due diligence to purchase the right assets and the right lien. So the risk would be not buying the correct parcel, not buying the property that is more valuable than the back taxes, or most importantly, just not understanding the steps in order of the redemption for the seller too. So there's just making sure that you're surrounding yourself with the right people and understanding the steps and going through it the legal route as well.
Fantastic, man. What advice would you give someone who is interested in starting tax lien investing but doesn't know where exactly to begin?
Yeah, I mean, there's a lot of information on the internet. I mean, it's there's information for everything, right? I mean, it's all free. You go to google.com, you're going to get free information. What I've discovered that's worked for me is I've tried to surround myself with the people that know what they're doing, right? Because my biggest successes have come not from something that I've done, but it's came from somebody that I know that's in my circle that knows their specific niche way better than I do. Okay. So when I go and focus on building a business or I focus on purchasing real estate, I actually never focus on the real estate myself. I focus on uh, delegating out to the people in my circle that know the game better than I do. And then on the back end, I can end up being the investor and being the puppeteer and making sure all of my teammates and all of my team is in the correct positions to take deals down. Because if you think about it, talking about wholesaling or whatever it is, a wholesaler is going to make money by buying it at 5,000 and selling it at 10, right? I can make money by buying it at 10 from him and selling it to somebody for 40, right? So everybody can end up winning. If I'm focusing on keeping my nose on the ground and finding the next deal, well, then I'm not focusing on building relationships with my buyers. So I got to stay in my lane and I focus on having all of my guys on my team staying in their lane and getting paid for what they're good at doing. So for somebody that's just starting, figure out how to build out the team to help you succeed. Meaning, if you're trying to be the investor, well, then you need to focus on building relationships with wholesalers and building relationships with people that want to, have cash flow. If you want to be a wholesaler, you need to focus on buying property, understanding how to buy tax liens, meeting with attorneys, figuring out what banks, like, are banks having pre-foreclosures, like learning that skill. So there's a lot of ways to get started. If you focused on my website, I've got a free webinar on it. I've got a whole course on it, like the whole thing, teaching people from start to finish how to go and apply for a tax lien property in Alabama, like step by step, every single tab that you need to have open on your computer. Here's how you go look for this. Here's how you double check the parcel on the parcel map for the city. Here's how you go and apply for it, like step by step by step, making sure that you know exactly what to do when you go and apply for a property. So I would just focus on building out your team first. Once you understand your position on your team, really hammering down and becoming an expert in that lane.
Yeah, 100%. That saying birds of a feather flock together, that's real. 100%. I can confirm that even for myself.
Yeah.
What resources or educational materials would you recommend for someone looking to learn more about tax lien investing? I know you mentioned your website, but do you know of any others?
It's the reason why I made something specifically for Alabama is just because if you do type in tax lien investing on Google, again, the free search engine, you're never going to find a blanket ebook, or you're never going to find a blanket statement on it because it's